Hello, thanks for tuning in to this week's Market Talk Monday. This past Friday, I shared the following Bloomberg article with the investment team, and its title, Cathie Wood, ARKK faithful, face biggest test with inflation shock. The article's key takeaway from our Bold Profits perspective, investing perspective, was a subhead in the article titled, The Case for Holding. And it reads as follows. For those who have stuck with ARK through the past year and a half, which saw ARKK plunge more than 70% from its record high in February 2021, some argue that it makes sense to stay the course if you believe that Cathie Wood has a vision into the future and that the companies she's picked are ultimately going to win, then you should hold that ETF. Why give up now? Wood has repeatedly said that she picks stocks based on a 5-year investment horizon and that drawdowns are opportunities evoking the buy the dip mentality. To this article, I actually want to share with you Paul's internal response to the investment team. And if you've been actually a long-time reader of Bold Profits materials, which you can find at boldprofits.com, then you know that Paul is super focused on innovation stocks of the future. These stocks are set to remake the world that we live in, as well as the U.S. manufacturing sector. The megatrends actually driving these stocks are creating a whole new world economy that is leaving old world industries, manufacturers, as well as traditional businesses, well, it's leaving them behind. So Paul replied to this article, and I quote, "It's only hindsight that you know that you bought at a low price to make the big money. In the moment, there is nothing but fear, uncertainty, doubt. I could have bought it cheaper," is what people think during periods of low prices. Then later, when prices are rising, OMG, I should have bought more. That's human nature. We are loss averse for volatility, for things we know will rise long term, and risk seeking and chasing capital losses for complete gambles and lottery jackpots. Behavioral finance studies show this. In study after study, we are always loss averse, unwilling to sit through volatility that can lead to long-term gains because we hate the idea of a loss, even if we understand that it's temporary. And we are risk-seeking, willing to accept capital loss for a gamble. People with a future forward investing mindset, a bold and strong hands outlook, are more willing to sit through temporary losses because they can see what we are saying is likely to come true. On the other hand, those who have a more day trader mentality, for the most part, do not like the idea of having to sit with a loss for a short period and want us to trade in and out so that they never have to sit at a loss. Trading in and out means making many, and I mean many decisions. Decision research shows that the more decisions you make, the more mistakes you make. This is why all the great investors are long-term. They minimize the number of errors they can make by trading as infrequently as possible. All the great investors are long-term. Let's let that resonate just for a moment. Something to think about. So with that said, I want to actually leave you with this profound glimpse of the future to help you during this strong hands moment. It's always good to be looking forward. So in Paul's Profits Limited model portfolio, he's invested in what he calls America 2.0 stocks. These stocks are fully vested in the new economic and manufacturing boom that is being driven by a variety of next generation technological innovations, industrial upgrades, as well as consumer trends. These stocks are part of the megatrends like 3D printing, precision medicine, metaverse, renewable energy, robotics and artificial intelligence, the millennial generation, the Internet of Things, blockchain, the food revolution, among others. So here are 3 charts representing the future potential market size growth of some of these megatrends. They show you where we are now and where we're potentially heading. The first megatrend is 3D printing. The global 3D printing market size, currently valued at $18 billion, is projected to grow at a compound annual growth rate of 24.3% from 2022 through 2029, reaching $83.9 billion by 2029. The next megatrend is precision medicine. The global precision medicine market size, currently valued at $74 billion, is projected to hit $140.7 billion by 2028, growing at a compound annual growth rate of 11.5% from 2021 through 2030. And finally, I'd like to highlight the global metaverse market. A market, I must add, that Paul is very optimistic about. His latest stock recommendation in Profits Unlimited is a software company at the core of this market. The global metaverse market size, currently valued at $60 billion, is projected to reach $1.6 trillion by 2030, growing at a compound annual growth rate of 50.74% from 2021 through 2030. 50.74% compound annual growth rate. I just think that's a dropping number. It's just a huge number. First wave companies like Facebook are so concerned about being leapfrogged in the metaverse rise that they are willing to partially set aside working on very valuable properties that they have, like Instagram and WhatsApp, to actually focus their additional resources, several $1 billion per year, to go all in on the metaverse. Let that sink in. Now, the potential gains in this megatrends, in all these megatrends, actually appear to be evident with the compounding growth happening year after year that's projected. Now, if you want access to Paul's full portfolio of Profits Limited stocks, actually you can click the icon, the strong hands icon right over my shoulder to get all of those details. And as we live through this strong hands, bold profits nation, this trading environment for our innovation stocks, it's a strong hands moment. So consider having Paul's 5 rules of the investing game in the forefront of your mind. Never make an all-in bet on one stock is number 1. Number 2, equal weight all the positions in our portfolio. Number 3, build your positions over time, meaning don't dump your money in all at once. Rather, put a little bit of money in over a course of a few weeks or a few months. Number 4, take profits on the way up. Up will happen. Take profits as that happens. And lastly, keep cash on the side. And remember that you can follow Paul and me on Twitter at Mampilly Guru and at A Lancaster Guru for the latest news and trends on America 2.0 sectors, stocks, etc., and investing. And I want to thank you so much for watching. Keep those strong hands. And until next time, take care.